Well, hello and welcome to another episode of David Bahnsen's Capital Record, brought to you by National Review. And we want to use today to get right into a discussion about a big current event, a big market sensitive topic playing out in the national news cycle that I happen to believe is not over yet. I did a Capital Record episode with a guest a few months back about the situation with U.S. Steel being potentially acquired by a Japanese steel maker, Nippon Steel. And since then, both before that podcast aired and since, National Review has editorialized several times on the subject. My colleague and friend, Dominic Pino, has written a number of wonderful articles. The entire editorial staff has chimed in. So we're a kind of a single voice at National Review on this topic. But I have tried to address the matter around the economic implications. I think there's more than just the political story. There's more than even just the kind of pragmatic arguments that are being made as to why the US blocking this deal is such a bad idea. And it is politically unique because it's a rare situation of bipartisanship, meaning both parties are willing to be equally insane on this issue. And I don't know that we are being colorful enough in the way we're talking about this issue. There are plenty of things that I have strong opinions on, and reasonable people have differing opinions. And I would not call the differing position insane just because it is not mine. In this case, I believe the opponents of this deal are doing a huge disservice to some of the principles they claim to believe in. I want to give you a quick amount of context and then make the case for why this deal should be being approved, and that why both incoming President Trump and outgoing President Biden standing in opposition to this deal is so incoherent. I want to make the case as to why it is hurting the cause of those who want more sensible controls around foreign direct investment in the United States. And I want to make the case why I'm not sure the last chapter of this book has been written, that even President Trump, with his rhetorical opposition to the deal, could very well end up coming around to supporting it. The quick context is that U.S. Steel, which of course the name of the company is U.S. Steel, but it is not owned by the U.S. It's a private company. And when I say private, I mean it's not a state-owned enterprise. I will point out, by the way, that Nippon Steel is not state-owned by Japan either. It is a Japanese-based company that is owned by its shareholders with no connectivity to the Japanese government. Likewise, U.S. Steel is owned by its shareholders. It is a publicly traded company, which for many years was one of the 30 Dow Jones Industrial Average constituents. Its ticker is famously the letter X, which many companies that trade in the Dow or the S&P or the NASDAQ have a ticker that is somewhat descriptive to the name. U.S. Steel's been around and been publicly traded so long, it just has the ticker X. The total capitalization of the company, that the offer that Nippon Steel has made, is for $15 billion. The company is currently trading at a market cap of 7.4 billion. So the stock is trading way down because of the block of the deal. But I just want to give you a little context. 7.4 billion is basically a small cap company these days. You could argue it's a mid cap company, but I mean, it is not even in the radar of one of the larger US companies anymore. It is a very insignificant company in terms of size. Now, there's been moments, let's see, the stock price briefly at one point was up in the 100, from let's call it 2006 until 2008 had been way higher. But I mean, it's lingered around this phase where it is now for some time. A lot of this is just the secular pressures in the steel industry. Well, guess what one of those pressures is have a very hard time raising capital. It's a capital intensive business, and there is a great deal of unionization that puts upward pressure on prices. There is a very heavy regulatory apparatus. It makes it cost inhibitive. And it is not an industry that has attracted a lot of equity or debt capital in the United States. There is tremendous competition from some foreign players, and you will be shocked to know that some of those most significant and material competitors are Chinese. Now, a Japanese company, Nippon Steel, makes an offer well above market, a handsome premium to equity shareholders of a U.S. shareholder base in the company U.S. Steel. And President Biden announces that on the basis of national security threat, he's going to block the deal. Well, what exactly is the national security threat here? And I'm going to ask you real quickly to bear with me, because I'm not merely providing my own commentary on this issue, but if I do my job right here today in Capitol Record, I'm going to leave you with a principle-based point as to why this deal matters around the issue of economics, the way we think about economic application, that there are principles that can be appealed to, that when we violate those principles, we not only get a policy decision wrong, but we mess up economic calculation for others. This will have a human impact. There are always trade-offs. That's what economics is about, is laws of scarcity. But in this particular case, the arguments in favor of this deal are so overwhelming relative to arguments against it that I think there needs to be a principle-based understanding as to why the opposition to this deal is so counterproductive. The national security threat being posited as a reason to block this deal. President Biden literally used CFIUS provisions to make the case that this represents a threat to United States national security. First of all, Japan is already right now, and Japanese-based companies, the number one foreign direct investor in the United States. Japanese companies have invested a little bit over $800 billion in the United States. 1 million new jobs have been created as a result of Japanese equity investment in the United States. It is estimated that of those 1 million jobs, 500,000 of them are manufacturing or manufacturing oriented, manufacturing adjacent. The actual quote from the White House several months ago, and I appreciate my colleague Dominic Pino bringing this to my attention, the U.S.-Japan alliance, as it evolves into a global partnership, promoted a shared vision of progress and prosperity for the future. In what world have we now decided that one of our great allies that is in a global partnership with us, promoting progress and prosperity for the future, that we have seen fit to take almost $1 trillion from in foreign direct investment, that are companies based in a country that we have 50,000 of our troops based in as part of our post-war consensus of maintenance of world peace and protection of Japan, that we are currently selling $3.6 billion of missiles to a company who has a country who has a company that wants to invest $15 billion in the United States, $1 billion of fresh primary equity capital, committing to keep the jobs that are there, factories staying open, maintaining Pittsburgh as the ground zero central headquarters of the business, maintaining US-based executive leadership of the entire company, which, by the way, already has, I'm referring to Nippon Steel, facilities in Alabama, Kentucky, Indiana, West Virginia, Some of those facilities have been there for decades, over 30 years, that we have now decided this represents a foreign risk, a national security threat. This is rank politics around the cosmetics of a company that has a great deal of blue collar workers, largely unionized workforce, that the appearance of foreign direct investment being undermining a narrative is causing both President Biden and President Trump to be on the wrong side of this issue. Japanese companies, Toyota, Honda, Mitsui, Fujifilm. By the way, Mitsubishi took a 22% interest. It may have been, actually, if I remember correctly, it was 29%. I was managing director at Morgan Stanley in October of 2008 when the company, on the its heels in the depths of the financial crisis, unable to secure a deal. They, at that time, the Treasury Department was begging Morgan Stanley to do a deal with the China Investment Corporation, an actual state-owned enterprise. The key investment bank in American capital markets. They were looking to what is essentially an outreach of the Communist Party for direct investment. And in the course of that, Morgan Stanley fell into the loving arms of Mitsubishi. And there was a part of that deal that was a convertible preferred that may have been satisfied. And it was a wildly profitable deal for Mitsubishi. It was desperately needed equity capital at the time for Morgan Stanley. They received a $9 billion check, a big equity infusion that recapitalized its balance sheet that had been impaired by the mortgage crisis. So there is a large precedent of Japanese companies putting equity capital in the United States. And from Fujifilm to I mentioned Honda, Toyota, these other companies, and now us saying that this Nippon Steel that's already had a U.S. presence in the steel industry for years is a national security threat is utterly preposterous. Across all lines of reasoning, this is a pretextual political decision that has nothing to do with national security. Foreign direct investment matters because investment matters. Investment drives productivity, productivity drives growth. And many of the people are so worried about trade deals and the idea that the U.S. runs trade deficits and that we are importing more than we're exporting, which means we're shipping out more dollars and receiving goods, and that we're worried that our capital is going out and it's not coming back in. Now you have a country wanting to take those dollars and put them right back in the U.S. to invest in U.S. company, paying U.S. shareholders, and employing U.S. people, honoring the union agreements in place, honoring commitments that would be contractual to maintain Pittsburgh as a location and U.S. executive management. And we're saying, no, we don't want your direct investment. The free flow of capital is vital to American capital markets. It's vital to growth and productivity. But here is the thing I want to say. When we use this disingenuous line about national security, it undermines the credibility that is necessary when there will be a real national security reason to not allow a deal to happen. A free marketeer like me, who is, as you hopefully heard in the podcast I gave the other day about the importance of worldview and first principles in formulating what we believe about economics, a free marketeer like me does actually believe there are sometimes national security reasons, a certain deal involving a foreign entity, particularly state-owned enterprise, that a deal may warrant further scrutiny. I happen to think it should be a high bar. I very much want to favor free flow of capital, capital in, capital out, because I believe it promotes ingenuity, innovation, and again, ultimately productivity and growth. But there are reasons sometimes to have national security concerns. And when you make one up whole cloth or stretch the definition of national security here, to include an ally nation that we're doing tons of other business with, that we're literally selling missiles to, and then already have a web of significant amount of investment with, and then saying, no, this is a dangerous deal, when it is so clearly being done for political reasons to make happy union bosses, not even union workers, not even local town management, which are all overwhelmingly in favor of this deal. Because apart from an equity infusion into a company like US Steel, people are going to lose jobs. This is a CapEx starved company in need of risk capital, and there is a foreign investor willing to make it and follow a bunch of other US imposed rules to do so. And when we use a national security line to block it, we undermine the credibility for the future of when there really will be national security reasons to not do a given deal. I do not believe we can say that we don't like the idea of us buying things from foreign manufacturers and complaining that we're shipping dollars, but they're not buying goods from us. Where in this case, they are literally talking about shipping dollars to us, currency to us, not vice versa. And we're saying, no. But now let's get to the real national security question and principles-based issue, because all of economics deals with the visible and the invisible, the things you see that may or may not be a problem, but then the things you don't always see that may or may not be a problem. They involve short-term and long-term. And of course, we have to look at the big picture, and not only how it affects a certain group of people, but how it affects all people. And what are some of the knock-on effects in blocking this deal? I mentioned earlier in the podcast that the largest manufacturer of steel around the world is China. All this blocking this deal does in weakening the capital base of US Steel is give more market share to a real national security threat, a real adversary, a real foe, the communist country of China. They get stronger by this deal not happening, and two ally nations, the US and Japan, two friendly companies, US Steel and Nippon Steel, get weaker. So you not only hurt US jobs, you fortify China, you limit opportunity for growth, all for political window dressing to appease union bosses. This is insane. And it is not what those of us who advocate for a market economy and a free society for the purpose of human flourishing should stand for. If we're going to have a role for the federal government to play in approving deals with foreign actors, and we're going to set as a criteria for that national security, then we need to do it with integrity and seriousness. Because all we do is undermine markets, undermine credibility. Markets require confidence. They require credibility. They require faith, and that faith comes from integrity. And blocking this deal undermines integrity. That's why I care about it. By the way, my family and my company and clients are not investors in US Steel. If I were an equity investor in it, I would disclose that. That's not what this is about. This is about my vigorous belief in free markets, but also capital markets that allow for foreign direct investment, that promote such, because they drive the type of results we want. And in this case, we are getting all of the negatives and none of the positives. The negatives being a weaker US Steel, a less capitalized company, ill-prepared for the challenges of the 21st century, less jobs because there is no primary equity capital coming in the company, a weakened shareholder base because the market capitalization of the company is so much less than the premium deal being offered, and a strengthening of our real foe and adversary, which is China and the Chinese state-owned steel makers that are emboldened by blocking this deal. Other than that, how was the play, Mrs. Lincoln? That's literally how bad this decision is. And then you say, okay, well, you mentioned maybe this isn't over yet. I'll wrap up with this. President Trump says, yeah, I don't support this deal. I don't like it. I don't want a foreign owner in U.S. Steel. And he says he's against it. Of course, he hasn't been president. Then he had a press conference a week ago saying that SoftBank wants to put in $100 billion in the U.S., but he's going to try to work on getting them up to $200 billion. Where is SoftBank located? Japan. But sauce for the goose is sauce for the gander. If we want to take a broad-based position of being opposed to foreign direct investment, then we will destroy jobs, destroy productivity, destroy growth, destroy economic opportunity. Thank God this is just coming from rank hypocrisy and not an actual posture against foreign investment, which nobody would actually have the guts to do based on the depressive-like characteristics it would carry for the American economy. The hypocrisy here to be bragging and promoting a large investment from SoftBank while saying we don't want a deal from Nippon Steel gives me hope that maybe cooler heads will prevail. And on the other side of this appeasement to union bosses, we'll do the right thing for union workers, which is approve this deal with Nippon Steel. Thank you for listening and watching David Bahnsen's Capital Record. Thrilled to be on the right side with my National Review colleagues of this issue. Reach out with questions anytime. Questions@thebahnsen.com. Talk to you soon.